Hey guys, this is Yash from Equitymaster, making markets simpler for you. To stay updated, don't forget to subscribe to our channel and like this video. In today's video, we're going to talk about PSU bank stocks, which are having a dream run on the bourses. The PSU banking sector is out of the woods after several years, fiercely competing with the private sector. This turnaround is visible as both major and minor PSUs have performed exceedingly well, reporting spectacular profits. This massive expansion in profitability comes largely from the loan growth in the corporate book. However, the government's monumental capex plans have also contributed to the same. With strong credit growth and cleaner balance sheets, the best PSU bank stocks are expected to be in demand in the coming months. Keeping that in mind, we'll look at the top PSU bank penny stocks in today's video. Penny stocks are shares of listed companies priced well below Rs 100. Before we move on, please note that this video is for information purposes only. It's not a stock recommendation and should not be treated as such. With that disclaimer out of the way, let's get started. The first PSU bank penny stock on our list is Indian Overseas Bank. It's one of the oldest and major public sector banks in India. With a market cap of Rs 1,344 billion, IOB shares currently trade at Rs 70, well below the Rs 100 mark. In the past 1 year, shares of the company have spiked over 160%, with most of the gains coming in the past 1 month. The recent rally comes after the bank posted stellar Q3 numbers. Indian Overseas Bank reported a 24% year-on-year rise in its total income at Rs 74.4 billion for the quarter ended December 23. It also reported a 30% year-on-year rise in its net profit. The state-run lender attributed this growth to a rise in income and improved asset quality. Note that Indian Overseas Bank recently decided to sell loans in the SME segment comprising 41 accounts worth Rs 2.1 billion. Going forward, Indian Overseas Bank expects a reduction in non-performing assets. The bank is also optimistic about the forthcoming financial year, projecting a credit growth of around 13 to 14%. Additionally, after a break of about 8 years, the lender is working to scale up its footprint by adding about 40 to 50 branches. An interesting thing to note is that in case of IOB, the majority of shareholding is owned by government, leaving only less than 4% of the total equity for public shareholders. This makes IOB a low free float stock. As of December 23, the Indian government holds over 96% stake in Indian Overseas Bank. Moving on to the second stock on our list, UCO Bank offers a host of value-added banking solutions. At the current price of around Rs 60, UCO Bank has a market cap of Rs 724 billion. In the past 1 year, shares of the company have rallied around 115%. The steep rise in UCO Bank shares comes after a decline in yields on government bonds after the interim budget. As state-owned lenders are sizable holders of long-term government securities, falling yields are positive for them. The company recently posted its earnings, where both gross NPAs and net NPAs showed improvement. Going forward, the bank plans to launch a new product for rooftop solar. The bank is currently projecting a higher loan amount disbursement for the infrastructure and corporate loan segment. Interesting trivia, UCO Bank is the first Indian bank to have received approval from the Reserve Bank of India to open special rupee Vostro accounts for foreign banks. Vostro accounts are accounts that foreign banks maintain with Indian banks to facilitate trade transactions in Indian rupee. As of December 23, the Indian government holds around 95.4% stake in UCO Bank. Moving on to the third stock on our list, Central Bank of India. As of December 23, the Government of India held 93.1% in the lender. Shares of the company currently trade at Rs 68 and the bank has a market cap of Rs 600 billion. In the past 1 year, Central Bank of India share price has gone up by around 140%. The lender recently approached the government with a proposal for an offer for sale instead of a fresh issue of equity through routes like QIP or a rights issue. The bank also recently posted a net profit of Rs 7.2 billion for the third quarter. As part of restructuring, it has restructured accounts from Manipur state due to disruptions resulting in an increase in the standard restructure book. Central Bank of India is taking various initiatives towards its digital segment. Its Cent Neo programs aims to improve digital products for the retail and wholesale banking segments. Retail, agriculture and MSME segments continue to be the bank's major focus areas. Moving on to the fourth stock on our list, Punjab and Sindh Bank is a mid-sized corporate-focused PSU based out of New Delhi. Shares of the company currently trade at around rupees 66 per share, and in the past 1 year, shares have gone up by around 125%. The bank has a market cap of rupees 450 billion. Notably, the bank has been increasing the provision coverage on the net NPAs over the last few years. Punjab and Sindh Bank is planning to raise capital and launch a QIP in the near future. It's also looking to leverage technology advancements for value-added services and digital lending. As of December 23, the Indian government holds around 98.25% stake in the lender, leaving less than 2% for public investors. The last stock on this list is Bank of Maharashtra. The bank is headquartered in Pune and operates through more than 2300 branches across India. Shares of the company currently trade at Rs 61 per share, having surged over 120% in the past 1 year. It commands a market cap of around Rs 440 billion. The bank recently raised Rs 10 billion via a QIP route. It has posted strong growth in recent quarters, driven by traction in credit growth in corporate and RAM segment. In the December 23 quarter, the bank posted record high operating profit, net profit, return on assets, return on equity, and cost to income ratio. For the full year, Bank of Maharashtra is aiming for 18 to 20% growth in advances. It's also targeting a business of rupees 5 trillion and becoming a fully digitized bank by the end of financial year 2024. As of December 23, the government holds around 86% stake in the bank. So these were the PSU bank penny stocks in India. Apart from that, here's a list of other listed PSU banks in India with some important parameters. As can be seen from this table, most of these companies have high promoter holding and the government owns majority of the shares. The sharp rally that we've seen in PSU bank stocks in the past 2 years is also an effect of the low free floats. A low free float can help the stock price to rise quickly, while the downside movement can also be as steep. Investors investing in PSU bank stocks should consider the fact that government holding could go down as the government decides to cash in on the rally and sell some stake and raise divestment amount. Overall, the PSU bank stocks are expected to hog the limelight this year as demand for loans is on the rise and expected to remain strong. The economy is also expected to grow more than 6.5% over the next few years. That's it for today. If you like this video, do share it with your friends and family. We hope you have a profitable trading day. Happy investing.